Good morning, everybody, and welcome to the Showdown. Happy Friday. You're in the Showdown. If you guys are brand new, we do some live trading. We take a look at some Forex pairs and might even take a look at some futures as well today and analyze it and see if there's any opportunities to take a trade using our Smart Entry AI tool. So I got your favorite guest, FxBigDog, join us today, and we're going to get right to the show after this. All right. Good morning, everyone, and welcome to the Showdown, FX Big Dog. How are you doing this morning?
Good morning, Cameron. You know what? I would be doing a lot better if this market just behaves well. The thing right here, and traders, listen, I want to go ahead and let everyone know I feel a pain with regards to what's happening with the dollar since the election. We actually just before the election, we actually were looking pretty solid with certain trades that we've been holding. And then we had the election. We had the results. Trump won, and it felt like the floor just went, completely out from under us, and and things turned around. And so today's conversation is really going to be a conversation around what's going on with the dollar. Where's the dollar going? We're going to look at the euro US dollar. We're going to look at the US dollar CAD, and we're going to have conversation around that as to what is going on and what can we expect. And then also, I know I've been getting a lot of emails, a lot of DMs sent out to me saying, "Big Dog, what's going on? How much further? My equity, this app." I'm going to talk to you today and give you a little bit of insight of the things that, I'm certainly not God. There's no doubt about that. There's a higher power up there. I'm certainly not God. I cannot change the way the market's moving. But what I can do is I can go ahead and look at certain things that help me to define what's going on. Now, granted, traders, I've got to say this, that yes, we trade a certain strategy, and when we get caught up on the wrong side of the trend, and this is just something you guys got to know, when we get caught up on the wrong side of the trend, there are things that you can do to go ahead and limit your losses or limit your drawdown. But there's also, you got to understand something. If you follow my master account, the master account's going to be sending out these trades just as the strategy, because it's built in, it's ready to go, and we have to execute as we've always done. All right, so the executions will continually be sending out trades. Now, you don't have to follow every trade, and you can also make decisions of how you want to manage your position. All right. And so, and let me just say this: it's not every day, every week we have this issue, but at least three times a year. And I've said this before: three times a year, we sometimes get caught in a manipulation move, and what ends up happening is we get caught on the wrong side of the trend, and it's a power move, which means the markets move further than what we expect, and then what we're trying to do is trying to work ourselves out of those positions. So I'm going to show you a couple of things of what you can do to be able to limit yourself to the possibilities of further risk on your trades. And it really just means going down to a daily time frame. Now, traders, because of what's going on in the market, because of the things that are happening in the market, Cameron and I have actually sat down yesterday for a long, solid meeting, and we've come up with a conclusion that change is needed. All right. Not just change needed in regarding the way we send out our trades, but also what we offer. And so there's definitely big things happening here at Traders Network Club that's going to give you guys an opportunity to be more involved in sort of a mentorship program and more involved into some trade signals, trade ideas, trade opportunities, right? So you're going to have both worlds. And what we're also going to be doing moving forward over in the starting off actually the beginning of 2025 is we're actually going to start off diversifying risk as well, which means we're going to go into two asset class. Forex and futures. And we're going to go ahead and break it down in that. Now, again, the details have not been finalized yet, but as we're looking at this right here, we're saying to ourselves, we had a question yesterday, and the question was, how do we get our traders, because we get a lot of traders that are making a lot of money, but they're not maintaining it. They go and they make a lot of money, and then suddenly we get into drawdowns, and they have to give money back again. Then they make a lot of money, and then they give back some drawdowns, and they get. So how do we get our traders to consistently make money all the time, even if it means a little bit of money, but making money consistency all the time instead of making a lot of money and then losing a lot of money? So that's the thing that we're working on and putting this all together. So traders, I want to let you know that we appreciate your support. We appreciate you guys being here, but also we understand where you guys are and the things that you guys are struggling with, and things that guys and then and when we have these these sort of unconditional market movements in the marketplace, we also understand that, hey, listen here, there's certain things that we have to do, all right, to help you to get better at what you're doing. Because there's some traders that are invested in what they're doing, and some traders say, well, you know what, I'm just going to follow the signals and not even monitor the markets until there's a problem, right? So we've got two sort of classes of traders, and we appreciate both of them because we understand some people just don't have the time to sit in front of the computer and do this. But the most important thing here that Cameron, came up with a great idea and looked at the model of the business and said, hey, you know what? I think that this is going to help traders to be able to diversify, and also keep it in mind that futures can be very profitable. All right. I mean, I've seen Cameron turn a trading day into a 50% return, 60% return, 70% return in just one day. We're not advocating that's what you're going to get. I just want to be clear on that. All right. Because we want to be a little less aggressive and and if we can get 20, 25% returns a month. Now, hold on. You're saying, oh, big dog, that's huge. Well, it is, but it doesn't have to be constant trading every single day. The nice thing about what we're going to be doing is we're bringing in a program, future trading program, that's going to help traders to be able to be in and out the market the same day, which means you don't have to sit into trades overnight for those that don't like that. But also you have the opportunity to go in and invest into a trade signal that's going to be able to give you what I like to call bread and butter trades, which means that you don't have to be heavily invested into that, meaning that a lot of traders are really trading aggressively and trying to get big returns. And what's ended up happening is they're making big returns, but they're losing big money as well. So there are two sides of what's going on. And we're certainly paying attention to what's going on with our traders. We're communicating with them. We're constantly having, it sounds like politics, but we're constantly having conversations with different types of students. And we feel where you're going. And Traders Network Clubs is all about growth. All right. And if that's not happening because some traders aren't just finding the right things to do, then we've got to change it and help you guys become better at this. And so this is our goal. Now, I'm not going to say that I'm not in some positions that I wish I was not in or hate that I'm in. And it is what it is. But I am diversified in my risk. And that's what we're trying to get out here. We're trying to show you that, listen here, although the markets are all wild and crazy like this, we have to be diversified, because if you've got all your eggs in one basket, then what happens when the US dollar CAD goes rallying off with the zero retracement and you get stuck in, then all your capital stuck into one asset class? Guess what? You've got nothing else to generate income, and that's not a good place to be. So you have to be an investor, you have to take your portfolio and you have to separate it and break it down into different asset classes so you can diversify and spread the risk across the board. And that's exactly what we're going to be implementing very, very soon. Now, we're not moving away from Forex. Let's just be clear. We're not moving away from Forex. We're not moving away from our trade ideas and trade signals. We're just making some adjustments of what we're going to do. But let's go into today's conversation. And let's talk about a couple of things with regards to what the dollar's doing. We're going to look at two pairs, US dollar CAD and the Euro US dollar. We're going to evaluate that and see what that's looking like. But then we're also going to go ahead and look at some future options, all right? And Cameron's going to go ahead and break down, just to give you guys a little bit of a clearer understanding of what that really means for you as a trader and how you can trade it. And I will be asking Camerons along the way. I'll be asking Camerons if you got any questions. make sure you go ahead and post those questions. I'll bring those questions into the room, and we'll actually have that conversation with Cameron. All right, it looks like I've got hiccups. All right, traders. Now, with that being said, let's go ahead and take a look at the markets this morning. And what I'm going to do here is I'm going to jump into my chart first here, Cam. So let's go into mine first here. And I'm going to go into the dollar. Right. All right. Now, by the way, traders, if you are not subscribed to this channel, make sure you go ahead and subscribe to the channel. We definitely want to go ahead and keep you guys in the loop. Anytime we do any live videos and live streams and that, we want to make sure you guys are part of it. Now, remember to subscribe to 2 channels, FxBigDog as well as Traders Network Club. Also, make sure you check out our social media. All right, look for Traders Network Club and social media. We're posting some good content. We're going to continue to post more content on that. It's coming up very soon. We're really getting the marketing team together. And then also make sure that you, also subscribe to our Instagram channels as well. We're getting some stuff sent out on Instagram as well. And then if you look at the description down below, you'll also find our Telegram channel. Look for the FxBigDog Telegram channel as well as the Traders Network Club, because both those channels, we're sending out trade signals in those channels as well. So traders, we're trying to connect with you guys. We're trying to make sure that we give you all the resources that you can get to in order to be able to get to us or get information from us. So make sure you go ahead and check that out. All right, now going to the dollar right here. All right, we've got to understand something, traders, that when you look at this scenario, and this is the thing, and you sometimes you wonder, how do we get caught up in the dollar trade, the US dollar CAD trade? Well, sometimes the market does certain things that just treat us a little differently, and when that happens, we got to be aware of that. Number one, firstly. Number two, we got to be able to make adjustments very quickly on that as well. But now take a look over here. So here we had a price, all right, creating a low, and then we had the market creating a high. That you can see price created a new low down here. We broke that structure and we started heading north. All right. Now, when it starts moving north and we have that reversal pattern appearing, price normally chases after the next high. These are internal highs. And then once we go ahead and we sweep that internal high, we then look for price to then start moving back down in the correction move. And this is where we get caught up, because look here, price goes up, it fails to hit that high, then it drops back down here, then it rallies up here, right? And so when it rallies up here, at that point we go, oh man, we are looking good, because what's going to happen? Price is going to go ahead and take out the low. We're going to come back down here, retest the support, and then it's going to turn around and hit back up north. This is what we expected out of the dollar. And what ended up happening? Well, we all know the election came, and what did the election do? It supercharged investors to want to invest into dollar assets. So which means we had a lot of money flowing into dollar. You saw the Swiss franc losing ground, JPY losing ground, and the euro losing ground. But the dollar just got stronger, because this was this optimism in the market, with investors believing that, man, the US economy is going to be a great place to invest money. And so money flew into the dollar. Hence the reason why we saw this big rally in the dollar. Now, when this ends up happening, what do we expect the markets to go ahead and do? Well, traders, we expect the price to go ahead, and if it sweeps the high, which it did, it's going to go to the next high. There it is there. Now, we have an external sitting over here. And so there's always that concern that the external is going to be struck. Now, this movement from here, from there to here, gives us our deviation levels. All right. And those are the deviation levels, is where we anticipating price to move to. And price can have moved to, now it doesn't have to move there in one sweep, although it seems like it did that, but it moves in these waves going up, right? And so what I'm going to do here is I'm going to put in my deviation levels here, and I'm going to show you where we're expecting the dollar to turn. So here it is, right? And here you can see, here we have the -2. So -2, and this is the thing, this is the concern I have. Now, I'm going to say this, traders, that we can turn, this pair can turn, and it can go ahead and move back into a correction move before it moves back up again. So there is the possibilities, and I'm always going to say that, there is the possibilities that price could find resistance here from this previous high, and then want to come back into a correction move before going back up north towards this area. Here's our deviation area, -2 and -2.5. So this is where ultimately where the reversal may take place. And we're talking about reversal, we're talking about a deeper reversal, not just a little correction move and then market move back, but looking for the market to actually go ahead and start heading further down south. This is where the market's actually targeting. All right. Now, let's take this information and move this information into a euro US dollar pair as well as US dollar CAD. I'm going to go into US dollar CAD first because that's the one that's really beating us up right now. And you can see right here, traders, we've got these internal lows right here that price tested. But of course, this is the external high or the internal high the market broke out of here. And there it is there as well. And so this was key. This was really important right here because it comes all the way back from that wick right there. Right? If you look at this right here, this is important because you can see how the market tested this area, that area, that area, and now we blew through that area. So when we look at the dollar, you look at this and you go, okay, so the dollar CAD, where could price go to? What is the target for this one? Well, traders, just like we did on the dollar index, I'm going to go and zoom in a little closer up here. And this move right here, all right, when price failed here and drove below the low, hit that previous low, and then turned around and head up north, I'm going to do the same thing here. I'm going to put in our deviation levels, all right? And so let's take a look where the deviation levels are going to be at. And I'm going to put it up from the high to that low. And now we can see here, 141.03, all right? So here's where price may go ahead and start turning in this area. All right, there it is. That is going to be I'm going to mark it off here as my reversal zone, right? Reversal zone right here. All right, now, because this is the reversal zone, all right, and because you're trying to save equity on your trading account, what is the thing that you need? What is the thing you do? Well, firstly, number one, stop the bleeding, all right? Stop trading other currency pairs. Firstly, number one, to maintain good margins. Next thing to do is to go ahead and say, all right, if I stop entering the market right now, if I stop entering and I don't enter more trades, am I going to get caught up where the market's just leaving me and I'm going to be left with all these positions down below and I can't get back up to my break even because I'm so far away from the market, which means that price has gone ahead, and let's say you've gone ahead and you started shorting the market right here, or even down here, but you've got multiple positions in, and now you stop trading. All right, you've put a halt there and you stop trading. So what you're going to do is you're going to say, okay, I'm going to only start entering the market once the market confirms that we're getting a reversal. What is the reversal? Traders, this is when everyone sends me an email and asks me, Big Dog, how do I get out of how do I manage my position? Well, first you stop trading, stop entering new positions. And what you're going to be looking for is you're going to be looking for a sign of reversal. What is the sign of reversal? Well, whether you continue to add or whether you don't continue to add, this is the sign of reversal that you're going to be looking for. All right. So if I look over here, the one thing that I'm going to be looking for is the daily candle. So I'm not going to look at a 4 hour, I'm going to look at the daily candle. And so the daily candle is this. It's based on a daily range theory, right? Or at least a candle range theory, my bad. So what you're going to do here is you're going to take this candle, this last candle, and what we're going to do is we're going to mark off that high right there. Okay. In fact, let me do this and use a different, I'm going to use trend line right here. And I'm going to go ahead. Where is that? All right. So I'm going to put that in there, right there. And so that high right there is going to be important to me, right? Because traders, this is the deal, all right? When the market does this, when price goes up, creates a high, and the next candle does this and closes below that high like this, We call this candle range theory. Basically, what we're saying is this candle is your range. This is manipulation above that candle, which means price is rejecting that resistance. And then price is going to come all the way back down to this area right here. All right. And it's going to come back to retest these lows. So what happens is price actually creates a range. All right. And the range is going to be this candle. And so what we're looking for is price to move back again. So this is the first sign. If price closes above, so if you have a candle that does something like this, and you get the next candle closing up like this, all right, the fact that we broke above this candle right here is an indication that the momentum is still bullish, right? Momentum is still bullish. And so because of that, if you look over here, we can see that if I take this right here, you can see that once we broke out of this was the election day candle. All right, this is the election day candle, and you can see right here is price was trading inside the election candle, but then when it broke out, look at that expansion move past. All right, we broke through that low, which indicated the momentum was up. The next candle, momentum is up. This candle, we've got momentum up as well. Now this candle is still active. It is Friday. It's still active, and it could change. So what is the high of this candle? This high of this candle is sitting at around about 140.64. All right. So what I'm going to do here is I'm going to say if price fails to close above that area, then I'm going to look for reversal. All right. Now, the fact that we are moving closer to our deviation zone, which are reversal zone right here, all right, tells me that we're getting to a point where things are going to start settling down, and we may end up seeing this happening a lot sooner than we expected. And so what I'm going to do here is when we get that reversal pattern setting up, all right, then what's going to end up happening right here, traders, it's going to basically trade just like I've been talking about AMD. What is that? Accumulation, manipulation, and distribution. All right, which means that this is going to be my accumulation right here. All right, so I'm going to mark this off as accumulation. So this is going to be my accumulation sitting over here. Then I'm going to look at this push right here as it blows through that high as the manipulation move. And we have manipulation. So therefore, traders, when we get the confirmation of reversal, now it's not just on the candle. The candle is one of the starting points. When we see price close out below the previous candle high, then it's an indication that we're going to start looking on the lower time frames for price to move into what we're going to call a sell side move towards this accumulation low. So which means we're looking for price to drop down to 38.18. All right, at least to take out the low and then come back into sort of rebalancing. So we spoke about 4 reasons why the market moves. Hunt for liquidity, and it's certainly hunting for liquidity. Create liquidity, it's certainly creating liquidity. Rebalance insufficiency, and of course rebalance equilibrium. So when the market starts reversing, what we're going to be doing is putting in our and let me go ahead and do here, putting in our fibs from the bottom all the way up here to the top. And what we're going to look for right here, traders, is we're going to look for the 5-0 retracement. There it is there. I'm going to mark this off right here, and I'm going to mark it off as my right here. I'm going to mark it off there at this level. And that is, I'm going to call it my, this is equilibrium, right? So I'm going to mark it off as my equilibrium right here. Let's see if I've got maybe I got another thing here. I have to mark it off. Let me see. Give me 1 second here. Let's go horizontal. And I've got template made up for that. No, it doesn't. All right. So let me mark it off on this candle here. And I'm going to go ahead and call this rebalance of equilibrium. Equilibrium. All right. So rebalance of the equilibrium. There it is there. Let me go ahead and, yep. So let me just mark that off as a template. Save that as a template. And I'm going to call it equilibrium. We got something that says that already? No. equilibrium. All right, there we go. All right, so we've got rebalance of equilibrium. This is where we're expecting price to move back to. Now, obviously, I'll extend it if the market goes a little higher. So traders, so to give you guys a little bit of inside information about how and what I'm looking for, and so so it doesn't take a lot of time from you to think about, okay, what is Big Dog really looking for when if the market's extending way past our levels? What are we looking for in order to be able to get some sort of relief? And traders, I would love to be a person that can change the market conditions, but I cannot. All right. And so I'm in the same boat as everyone else. When price moves against us, when we get caught up in these manipulative moves, all I've got to do is understand that I've got to just hold in. I just got to hang in there. Now, some of you saying, oh, but my equity. I get it. Stop adding new positions in. Wait for the reversal and then go ahead and start adding in. And then what you can do is, traders, if you stop adding in and you get the reversal, then you can just go ahead and replace the orders that you missed out on as price starts working its way down to this area. So you save your equity going up, and then when the market actually reverses, then you go ahead and say, all right, now I'm going to add those positions in, going back down as I start to look to rebalance or at least looking for the market to come back to that level. So this is where I'm at on the US dollar CAD. Traders, right now, all I'm doing is paying attention. My first sign will always be at the close of the candle. The daily candle's got to close, and I've got to see a daily candle that's showing a little bit of manipulation above the previous high, but then closing back below. Okay, first sign. Let's go. This is on the US dollar CAD. Now, on the Euro US dollar, let's take a look over here on the Euro US dollar right here. The same thing's going to apply here. All right. And I want to bring in a couple of things here that maybe you guys haven't paid attention to, but look over here. All right. First thing, number one, mark off this resistance. This resistance right here. I'm going to mark it off over here. You notice how the market, the support. Notice how the market is testing this level. This has been like this for about 2 years. It's been testing this level, bouncing off there, and now we're back at that level there again. So which means that traders, I'm going to be looking for the market to go ahead and reverse. Now I'm going to go back to the daily time frame. And so you're on the daily time frame. I'm looking at this. I'm going, all right, let's look at, once again, look for our deviation level. All right, let's go ahead and mark off our deviation, which is going to be from here to down here. There it is. This is my deviation. Where is the one, the -2 and -2.5? Right here. We're inside the reversal zone right here. Okay. This is the reversal zone. All right. And let me just go ahead and change the template. And let's go ahead and say this is going to be discount zone. All right. I'm going to call it my discount zone. It's not quite the discount zone, but I'm going to say discount zone. So which means that I'm looking for price to move back up. Now, here is my target. All right. This is where I expect price to go to. How do I get this thing to I want to stick this thing. How do I get this thing to stick up here, Cam? Do you remember?
What is that?
I want this year to be. I think it's this.
like have it up there as a
Yeah, yeah. I can't remember now. Is it this? No.
It should be your favorite.
And my favorites, yeah. It's there. It is. Show that. Is it hidden? Oh, damn it! It is. It's hidden here below this. I was wondering where it is. Okay, cool. I'm going to bring it up here. Excellent. There it is. All right. I was wondering where it is, and now I see it's below there. All right. Cool. All right. There we go. All right. So here we go. So now what I'm going to do is I'm going to be looking for price to turn around. And so what I want to do here is I'm going to go here to, so I've got a lot of reasons why price. Now today's trading was looking pretty solid for most part in the day. And then of course we had the news out again, which it wasn't like huge news, but we got the market to change around and start swinging. But what I'm going to do here is I'm going to go ahead and mark off this high right here. Okay. Oh, hang on. This low right here. Sorry. This is the previous day low. All right. And so I want to see the market stay above this area. And if we can close out with bullish candle and start taking out the high of that candle, perfect. So I'm going to mark off the high of that candle there too. So this becomes my range, all right? That becomes the range of that move. So what I'd like to see is this daily candle go ahead and actually close above this area right here. And therefore, traders, then what we're going to look for is we're looking for price to continue to show momentum. All right, we're going to see the market doing this, breaking above the high, continue. We got an order block sitting over here, which the market's going to come back to retest. So we know the price wants to come all the way up here to about 740. All right, 1.0740. So we know that price is going to work its way up to that area. So I'm going to be looking for this. Now, this is a good sign that price is not breaking below that low. It's a good sign, but I do want to start seeing a break above the previous high. So on the Euro US dollar, there's a couple of reasons why I believe the Euro US dollar is going to start turning around and heading back up north. Number one, we're in that discount zone. We're between the -2, -2.5 deviation level. And then also number three, we have price actually confirming that we have in a candle that's not breaking below and closing below the previous low, which is an indication that we're starting to slow down. We just don't have the confirmation yet. So again, waiting for the confirmation on the euro and waiting for the confirmation on the US dollar CAD. All right. So this is where we set up. Now, traders, I will go ahead and let you guys know as soon as I believe, and I'll post this on I'll even do a live video and post it on my YouTube channel. I will let you guys know when this starts changing. All right. Now, we're going to go ahead and look at futures, but also I'm going to give you guys a bonus trade today on the Euro Pound. We'll do a bonus trade on the Euro Pound. I'm going to hand it over to Cameron. But before I do, traders, I want to go ahead and let you guys know that, of course, these shows are only possible because of our sponsorships. All right. And we got a sponsor here on our show. I'm going to go ahead and run this. All right, guys, if you're looking for a broker, check out ACAP. They're based in Australia, the regulated broker, great company to work with. Check out ACAP. And of course, if you do open up a live trading account or want to open up a live trading account, use our link down below in the description or go to our website, check out our link for that. And what we want to do is we want to offer you some free opportunities to be able to be part of our Traders Network Club. And so make sure you check it out and let us know. All right. Now, Cameron.
Yes.
Let's take a look and see what's happening with futures, buddy.
All right. First thing I want to say though, before we hop into it though, the concepts and the models that I trade with futures can also be traded with Forex.
Fantastic.
I prefer to trade futures because price action is better. That aligns with the models that I trade. But they can be traded with Forex, and the spread is also better with futures when you intraday trade.
Okay, so what you're saying, Cameron, that when you teach people how to trade futures and trade certain models, and it's based on technical analysis, and teach them how to be able to identify market bias, isn't it? This can be applied to the Forex market as well as just not just to futures.
Yes, I have many models that I've traded,
Okay.
that I trade, and some of them can be traded with Forex, and that's something they can learn when I teach that. But I always prefer to trade Nasdaq. Just like I said, price action is a lot better, smoother, and the spread is a lot better too when trading Nasdaq. So it's a lot better when you intraday trading. So,
Yep.
But the models do align with Forex as well. Some of them. I have about 5 models that I trade, and there's a couple that can trade with Forex.
All right. Good.
All right. So, and this is really for the people that out there that actually want to learn how to trade.
Sorry, what about gold, Cameron? I just want to throw it out there. I know you don't trade gold, but what about gold? Could it be used in gold as well?
I've never really tested it, so I can't
Yeah.
really
I'll
speak
tell
on
you
that.
what, traders, next week, make sure you guys join us next week. We're going to talk about gold in our session next week. So, futures to this week is a bonus. Next week, our bonus is going to be on gold. We're going to talk about gold, and based on Cameron's models and how he trades, he's going to take next week to review it. And you'll actually, we're not going to be here next week. I just remember that's going to have to be the week after that. But make sure you guys subscribe to the channel, because the next time we go ahead and broadcast live, it's going to be talking about gold and how you can use these models in order to be able to trade gold more effectively as well. So keep that in mind.
Yeah. So today, I want to first say today's high resistance liquidity. We just had a dump in the market, and this is not really a day that I'm looking to trade. There can be an opportunity at this 10 o'clock to 11 o'clock window if we had some sort of retracement. So I was waiting to see if price wanted to retrace to this order block, and then we can have a inner or internal model on the sell side of the curve here to trade back to this low. Because what happens is if we had price run up here, we would retail traders would get engaged in this move in the market, and they'll start buying, send their stops down here. We had to run to this area, and then we wait for that internal model to set up here, and we can use a silver bullet um, model here to trade back to this engaged sell stops. So we never really got it. It looks like the market is just dumping. Maybe this afternoon we can look for a silver bullet setup, which will line around 2 to 3 p.m. That could be a possibility, but usually these type of conditions in the market, when you just see a dump, and a lot of retail traders probably looking at this and saying this was a great opportunity to sell, huge move to the downside, a lot of money could have been made, but that's not how you trade these models. This is not how you trade these concepts. This is just dopamine in your head right here, just looking at this, and that's not what you want. Okay, so what I'm going to give you a setup from yesterday's trade that I had, and show you a type of model that I look for and the concept behind it. Okay, so I want to go to yesterday's open on Thursday, and I want to show you this model that I took yesterday on the opening bell. So this is Wednesday. Oops, I went too far. All right, 9:30 right here. Okay. So first thing is we had PPI in at 8:30. Didn't want to trade from that 7 o'clock to 9 o'clock window, the AM session there, looking for those initial sell side and buy side. That's another model I trade. But when we have high impact news at 8:30, usually I'm most likely going to wait for the market to play out, wait for the storm to kind of pass by, and then get in at that opening bell to or that 10 o'clock to 11 o'clock window. So going here and looking at this model that I lined up yesterday, is this is the concept um, of this model. It's a 22 model of ICT. He teaches this, so you can check this out. But it's very simple here, and I'm going to show you a simple basic share of what is going on in the market. So first thing is, here's the 930 candle right here. Okay, we had a down movement into the market, and this is important. Why is this important? Because this is what engages retail traders to sell. When they see a movement in the market, they trade. And what is price this high? Where is price trading to? Retail traders love support and resistance. I don't use support and resistance. That's retail concepts. Okay, I use ICT concepts. I understand the algorithm of the market. So just to give you an understanding, I'm looking to say, what are retail traders trying to do? And that's how I engage into the market. So what we have here is this high right here comes into a area of resistance. Retail traders think, okay, we're in an area of resistance, price starts running lower. They're expecting this to act as resistance, and they're trading to support. So what the market wants to do, it wants to engage those retail traders in the market, gets them to sell at this high, and we see this run to the downside, and then price comes back to run those buy stops. Okay, these are engaged buy stops. That's why I call them engaged buy stops here, and that's what I want to see for me to say, okay, we've ran those retail traders that are selling here at resistance. Once we see that, now I'm looking for a change in state of delivery to the downside. What do we have here on the 1 minute? We see price take out those engaged buy stops, and then we see a change in state of delivery to the downside here. And this is where I saw, okay, this is the opportunity to look for some shorts. Where are my relative equal lows? And I'm going to go ahead and annotate down the chart. There's equal lows there. This was a London low, so that was important as well. I wanted to look at that London low. And then we had relative equal lows here. And this is what I had annotated on my chart, okay? And what do I mean by relative equal lows? All I mean is that we have a low year and a higher low year. This is where price is engineering liquidity, okay? Or the market's engineering liquidity here and running sell stops below this. And I'm looking for those liquidity to be swept. So coming back here, what was my entry model? Now there was a few entry models here. So once we've had this engaged buy stops taken, we've had this change in state of delivery to the downside. This candle ran all the way to these relative equal lows. Okay. We just had an SMT here. So if you wanted to get in and take maybe go in at a lower size with contracts here and then add and scale your contracts, that's completely fine. I didn't get in here. I wait. I was a little bit more patient through this. We had this change in state delivery. We ran here and I said, okay, price create a sell side imbalance, buy side insufficiency. I want to see buy side deliver into this range. Okay. Not only that, we also have what we call a breaker block. Okay. So we have price creating a high, a higher low. Okay, from this low to this low, or you can even we can use this low right here. So a high, then a low, which is a higher low, and then it creates a higher high, taking out this high right here. Then that run through this low. This becomes our breaker. Okay.
Now, traders, I want to just go ahead and say this. If all these terminologies are starting to go, oh my gosh, this is confusing, this is because it's just been delivered to you for the first time. So don't be confused about this because you're obviously clearly not educated in understanding the terminology and understanding the things. But understand the concept of now what Cameron's doing is just simply breaking the market down to identify the opportunity. And for those that are going to be joining in live sessions doing this stuff, this is the stuff that you're going to learn and you're going to start becoming good at this stuff. All right. So,
yeah. So here is a better example of trying to show you so you can see the lines on the chart, right? It's probably easier to understand and seeing this. So there you have a high, a low, create a higher low, and then a higher high taking out this high. Once price takes out this high, if we get that displacement through this low and this low, this becomes our breaker. Okay. So I'm looking at this, and the breaker is really this whole range from this high to this low. This is the whole range right here, but I'm using the first down close candle because that's where price will be the most sensitive. Okay. So what happened was, we create that run, and then price retraced back into where? That sell side imbalance. But also look at that. At a tick, it traded into that breaker. And then it ran to this low, took out this low. Now, I still didn't take part of this, and there was opportunity to take part of this, but I still was patient. Then price continued. Where do we have that? Let me go to the 5 minute. We had these relative equal lows right here. That's where I was looking. That's where I had my eyes glued to. Okay, oops. Because the market will draw to these key areas of relative equal highs and relative equal lows. So going back to the 1 minute, okay, this is where I saw the opportunity to take a trade. Price ran back into this breaker. But what is it respecting? Look at this gray line, if you can see here, on the sell side imbalance. Constant encroachment.
that's the
To under-
constant encroachment is 50% of that.
yeah,
Just
it's the
everyone
midpoint
knows.
of this gap. Midpoint of this gap is where I want to see price respect. And I'm not looking at the wicks, I'm looking at the bodies. Is the bodies respecting that? If the bodies are respecting that, that's how you know that the algorithm is delivering sell side. That's how you can understand the algorithm. Price is delivering sell side. So this right here, this move, what is this move? This is a stop hunt. Price is running back, taking out these engaged. What is this? Again, same thing I just brought up here. We had a run to the downside. We've engaged sellers, retail sellers. Why? Because they see that we've broken through this support, and these are the breakout traders. We break out, we come back into that area. They treat it as resistance. They're selling. They think they're going to make some money. Price wants to come hunt those buy stops.
So,
Now, yeah.
sorry, Cameron, I didn't want to interrupt you there, but I want to go ahead and say, go ahead and put a replay on that at that level. Go ahead and replay at that level, like right there before you enter the trade. And I want traders to start to the further left.
You want me to replay? You said
Yes. Go replay it. Yeah, there. Okay. Now, I want traders to experience this as you would be in the live market. This is what it'll be looking like in the live market. Now, keep going one candle at a time. Go one candle at a time. All right. So the market goes down, and it goes back up, and this is where it
So
respects that
we
level.
create another relative equal low. Again,
Okay.
price came back here, failed to take this high. We came back, ran to these stop hunts.
Now,
Your opportunity is saying, okay, once we swept this high, I'm looking for this breaker to hold and this SIBI to hold. So this would be an opportunity to go ahead and sell. And if you're not comfortable yet, I'll have my stop above this high, and I'll target those relative equal highs. Now I'm looking to say, can I scale in here? I can go in, say your full contract size is maybe 4 contracts. That's your full risk. And you're saying, okay, I don't want to go in right away trading that risk. I want to go in 0.5%. I go with 2 contracts. Then I look for an opportunity to trade or scale. And then I say, okay, price create a balanced price range here. Now that's not means price will always deliver that for you. And you can say, okay, we've created this SIBI. Now, and SIBI means sell side imbalance, buy side insufficiency. If buy side can deliver in this range, I can scale more positions. Price taps into that SIBI right there. That could have been another entry. If you wanted to be a little more patient to see, does this breaker hold? We displace out this breaker. We create that sell side imbalance, buy side insufficiency. This could have been a entry if you didn't get in here. Or I would get in here at 0.5% and then look to scale my full percent here into this relative equal lows.
okay.
And then price will run, continue to test it, come back, retest that breaker. Okay. And then it runs to those relative equal lows.
All right. So keep it in mind, traders, and this is very important, right? All right. And this is what I want to actually look at go back to do a rerun of that again. Take that take that out the way. And then do a rerun again. I want to show something. Go back to the rerun. Yep. You just
Where?
go back to the same thing around there. Yep. And then go candle by candle. Now go one candle at a time. And then when that candle that you want to enter, we're going to actually put a sell in there. So go there, up, up, up. Okay, there. Next candle is going to be the next one. Next candle.
This is where I would take my
Okay. Go ahead and put the sell in there at the bottom over
now,
there.
I would say this is what I would go with. Say if I want to trade 4 contracts, go with 2 contracts.
Okay, 1 contract's in. Put a stop loss up there. What is your risk? About $70. All right, $70 risk. Your target is going to be $300. That's what I was going to point out there.
259, yeah.
Right.
And it all depends on what you're willing to risk. If I'm willing to risk about $150 for a trade for the day, if I'm willing to risk that, then I say, okay, let me go at 0.5% a year, and then I'll look to scale. Or say if you're not, say I don't want to risk $100, I want to risk maybe $50 and go with 1 contract. Okay, go with 1 contract, and then I'm looking to scale. Now, got to keep in mind if you want to scale, your risk is going to go a little higher. So once price runs in there, I won't be able to get into a good entry. You're just going to wait till price runs actually into that SIBI. So right there, now price runs into that SIBI. You want to sell again. Okay. And then now your risk is a little bit more. Now you have to understand, what am I willing to risk? Okay. Am I willing to risk that much? Or you can also wait for price to run back to this SIBI right here to retest this SIBI. So it's all up to you how you want to risk it. You can also minimize your risk a little bit, just keep it above that breaker and hope that breaker respects it. Okay, and it all comes down to what you want to risk, and you let price kind of play out.
Now you're going to get nervous when the market's consolidating like it did there, but that is the normal thing, right? The market's
Yeah,
going to
but you don't
consolidate.
have to scale in. Like it's just different ways of trading pyramiding. When you're first new, I probably would say to you, don't pyramid. Just get in at one contract, two contracts, whatever you're willing to risk, and just let that run, and just let price play by itself.
Now, if you take a look over there, the profit on that trade was $419. I wanted to put things in perspective. Cameron went in with two standard lots, two contracts, and then he went and added another two, so 4 contracts total. But if he just took the one contract and he only traded just the one contract, and just divide that by 4, so his risk was initially $70. So divide that by 2 because you had 2 contracts. That's 30. Call it $35. So $35 was his risk. All right, hear me out. $35. Take the 400 divide by 4, it's $100. So his profit was $100. So he was risking $25. Oh, sorry, $35 for a $100 profit. Now,
Well,
traders,
I was initially risking 70. Was it $75 for
two contracts. Yep.
$260?
Yeah. But
So if
I'm
I wanted
saying,
to go with just two contracts and just risk that amount of money, from $75, I'm risking to make $259. Now, this is just one trade. There's many different models that could be different. You could be risking $50 to make 150. It just depends on how many handles the price is giving you, right? How many ticks, right? Price is giving you. I always look for about 10, or at least about, I would say, 20 handles. Okay, if price can give me 20 handles, which is 80 ticks, that is an opportunity for me to trade. If price is giving me less than that, then I'm not really eager to take that trade.
yeah. The point here, guys, is I want to put out this is what I want to do. Thank you, Cameron, for that. All right, that's perfect. This is what I wanted to show them. So what I wanted to mention here is this. Okay, what's important is, number one, is that you understand market price action. You understand price action based on this. This is the whole purpose of this. And as Cameron mentioned, you're going to learn more about price action trading futures, and it can be applied to Forex as well. So you'll learn about Forex too. But now look at the amount. The reason why I broke it down, I said to him, all right, if you traded only one contract, your profit would have been $100. So you're risking about $35 for $100. So this is what I'm trying to say. If one contract can be traded with $1,000, so $1,000 you can trade one contract, all right? And that'd be, and so if you're making $100 a day, all right, what is that? That's 10% per day. Now, I don't want to get you too excited and say, hold on a second, yeah, my mind's blowing here, because if it's 10% a day, 5 days, I'm making 50% in a week, I'm making 100% in 2 weeks, I'm making 400% in a month. I know it's mind-blowing, but this is what I want to go in. I don't want to paint like you're going to make thousands of percent a month. The possibilities are there. But what I do want to say this is that you don't have to chase after everything, number one. Number two, you don't have to be in the market every single day. And when you're in the market, you're going to be in the market maybe for a few hours or a couple of hours, and you're out. There's no holding overnight positions. So it's a win-win for traders and investors that are going to try to get in and say, hey, I want to spend a couple of hours in the morning, look for my setup. If I have it, I trade it. If I don't have it, I walk away. Why? Because traders, if you're making 10% on a trade with $1,000 trade, right? If you're making 10%, then just think about this. If you're trying to make 20% a month, all you got to do is find 2 solid trades. You can be real specific about your end. You don't have to chase after everything that moves. All right. And just by the way, you're not trading doesn't mean you're not being productive. Actually, in fact, sitting here, watch it, and don't see anything and decide to go play golf that afternoon is actually being productive, because it's you. What you're doing is you're saying, hey, I'm not going to go ahead and put myself in that position where I'm going to trade something that's not there, and I'm only going to wait for things that are there. So it's very important that you understand that it really does a lot of things for you as a trader. It helps you be able to understand the market better. It helps you be able to be in and out of the market without putting overnight trades in. It helps you to be able to look for the perfect trade and still be a winner. Even if you make one trade a month, you got 10% return on your investment. That's not a bad trade. Now, this is the thing. If we take that information now, all right, and we convert that into the currency market, let's just go ahead and use the same sort of concept. All right. Cameron's going to be teaching about the deviation, what the deviation levels mean. If you look over here, notice that the US dollar CAD, what happened? Price tapped right into the deviation there at 1.41, and we had pullback. What's going to be interesting today is a close below this previous candle. If that happens, traders, we're heading back to retest this low. And if we start trading below the low, if we see a nice displacement move below that low, we're heading down towards this area and then that rebalancing level right there. So here is the first starting point. Traders, I've told you about manipulation of the market. It's happening. It happens in these bigger moves like we have right here, and it happens based on previous highs as well. These are manipulation moves, and we've got to be careful about that. We've got to understand why is price doing that. All right. Now, I said I was going to get you guys a trade in before we leave today, and I said it was going to be on the euro US dollar. So let's do this so I can keep to my word. Here is the euro US dollar. Don't have a trade on this. Let me go ahead and take a look and see what the market's doing. I'm going to break this down, and I'm going to go to euro US dollar, right? And so looking at the euro US dollar right here, let's go ahead and actually clean up house. Let's see, I've got a lot of stuff over here. Let's go ahead and clean up house. All right. And I'm going to go into this, and let's go ahead and find a trade. So first thing I want to go ahead and point out here, trade is very important right here, is let's take a look at the lows. What has price done? Price gone ahead and swept the lows right here and is traded back inside. Look at this. Now there is a fair value gap, which you'll learn about fair value gaps. There's a fair value gap sitting right here, right? A daily fair value gap. Market's struggling again, struggling, and so what we should be doing here is not trading as price is testing the fair value gap. We shouldn't be buying right now because this is resistance. But now I have to look at the overall sort of structure of the market and take everything in context, right? And so what do I see here? I look at this and I go, hold on a second, wait a minute. We had the market struggling, struggling to break below, goes up, gets there, and then breaks through. Manipulation. Now it comes back up and it's now sitting above the support again. Guess what's going to happen? Price is going to come back to what? Take out the high. So which means that I'm less worried about this fair value gap here. And I believe price is going to trade above that. And we're going to get through this fair value gap. So I'm a buyer as long as we stay in above here. Now, I said I was also going to give you guys a little bit of a hint of how you can start protecting yourself to avoid bigger drawdowns. And it comes back to, once again, looking at daily candles. So if I look over here, if I go ahead and say I'm going to buy on this, what I can also say is that if price trades below this area, I'm going to cut my position and not continue. Because why, traders? I want to see the market creating new highs. And if it does go below here, I just don't want to be part of that. Because if it goes below here, then it's chasing after this low and it's going to possibly go even further. So what I'm going to do is I'm going to go ahead and do this. And again, traders don't have to follow what I'm doing, but I'm going to buy. If you're watching me in my Telegram channel, you'll see a buy opportunity coming in the Telegram channel. Now, what I'm also looking at right now, okay, and it just popped up here. There we go. There's the buy. So what I'm going to do here is I'm going to watch this. And if price goes below this, my job is to continue to trade, right? Because I've got good management, risk management on my trades. But if you're sitting in a position where you go, listen here, man, I'm tight with margin. If the market goes below this low right here, all right, and we have not a spike, a close below, all right? So if the market closes below 83.07, a daily candle closes below that candle, and we have displacement below there, that's a good reason for you to say, I'm done. I'm out of this. I'm done. All right? But if it doesn't displace below and close below that candle, then you can continue to hold that position because we are still anticipating price to move towards this liquidity level right here. And this is going to be my buy side liquidity up here. So I'll set this up as my buy side right here. This will be an internal buy side liquidity. I'm expecting price to move to that level and continue to move. Now, what will be perfect, just as Cameron mentioned early on, would be the perfect scenario if we can get a good displacement move or expansion move through this area right here, and then we know that this area will become support as it starts continuing to move towards that external there. So if we in today see a daily candle close up here, or maybe tomorrow or the day after, we see a good displacement up there and you want to hold onto your position, you can hold onto that position knowing that you can move your stop to break even, keep that position protected, and allow price to move to this external move right here. All right. Now, for those traders that are interested in trades with stop losses and all that good stuff, when we get into the new program and start talking about this stuff, there's going to be an opportunity for you to be able to have the bias and then deploy a trading system that's going to be buying or selling in that direction with stop losses, protecting it, trading stop losses, all that good stuff. This is coming up in the new year 2025. New stuff, new exciting stuff. Traders, with that being said, hopefully you guys enjoyed the session. If you did enjoy the session and you loved what Cameron was talking about right here, and you guys are really eager to get involved in that, make sure that you guys subscribe to the channel. That's all you got to do. Subscribe to the channel, share the video, share the content, and let's get excited about things to come. Now, we're going to be talking about more and more of this stuff over the upcoming months. So we're going to, or the upcoming weeks, we're going to share with you the next time we broadcast here. In fact, not this next time, but we're going to be sharing on our social media ways that you guys can get information about the new things that are coming down. So make sure that you are going to our social media, and we're talking about Instagram, Facebook, Twitter, or X. Connect there because we'll be sending information through our social media on how you can get the information of what's going on and how you can get involved. Traders, thank you plenty for your time. You have a blessed weekend. God bless you guys. Have a great weekend, and we'll see you back next week. The following week. I apologize. The following week, we'll see you guys back in the live show. With that being said, this is FxBigDog and Cameron wishing you peace, joy, and successful trading. Till next time, traders, happy trading.